Hello everyone, this is Kathy Grosskirth with Bookkeeping Clean and Simple, and I am here today to talk about the chart of accounts, which is the skeleton behind all your financial transactions within your financial records, to include any automated financial programs such as QuickBooks or any of that type of software. As you can see here at right is a sample chart of accounts with notes. Now the first three categories of accounts are balance sheet accounts, and then the last two categories are income statement accounts. When taken together, these two statements give you an overall picture of your organization's financial health, and if you are an accountant or bookkeeper, then this is something you need to understand, so that way when you're entering stuff into your accounting software, you'll understand where everything needs to go so that everything is accounted for properly. And again, like I said, you have to understand the basics behind what the chart of accounts represents, so that way when you do run these reports, you'll understand not only how to interpret the information, but to understand how the double entry bookkeeping system works. And that's a big part of the course that I'm doing. So we're going to talk about here the first three accounts, which are our balance sheet accounts. And the first account is assets. This is things that you own, such as cash in the bank, anything that's owed to you for credit sales, any equipment or land that you own, any supplies, raw materials, anything like that is considered assets. The second category is liabilities. These are things that you owe, such as if you have a note payable, or if you have a loan out, or if you have people who have bought things on credit. These are monies that are owed to you. And then the final category is the owner's equity. And in a corporation, it could be expressed as shareholders' equity, retained earnings, common stock. But these are your ownership of a business expressed in dollars contributed. Now, we are not going to get into the accounting equation here, but basically the accounting equation takes your owner's equity plus liabilities, and that equals your assets. And that's the bottom line basic premise of a double entry bookkeeping system, which we'll talk about in my course. Now the second set of accounts is known as the income statement or the profit and loss accounts. And those are revenues, which are monies earned through the sale of a product, service, or both. Sample accounts include retail sales, wholesale sales, sales income, consulting, bookkeeping work. And you can get as granular on your revenue streams as you need to in order to be able to get a good picture as to what is making money, what is losing money, and that type of thing. Our second category is expenses. These are the monies that are spent in the course of generating whatever sales of the product or service or both, or in generating your revenues. Sample accounts for those include rent, advertising, travel, utilities, telephone, anything that you spend in direct trying to generate those sales of a product or service or both. And we will talk about all this in my bookkeeping basics class so that you'll understand how all these work. So that way, when you're entering the stuff into your accounting system, you'll know how to classify these, or if you're a small business owner, you'll understand the purpose behind categorizing these in such a way. And like I said, this is a snippet from my bookkeeping basics class, which is a 6-module class. And I also have an introductory course that's a standalone course, which this information has come from. And if you're interested in finding out more, here's my contact information. You can go to my website on my contact page, schedule an initial free consult with me through my Calendly link. I would love to hear from you. And if you're interested in this, there's no obligation for you to reach out to me, but I would love to talk to you. So take care, everybody. I hope to hear from you. Have a wonderful day.